Hello and good morning if you're in Australia. Good afternoon if you're based in North America. This is our first mining pitch battle of our Mines and Money online global event from the 31st of August to the 2nd of September. We've got an absolutely fantastic lineup. So without further ado, let me please hand you over to our host and our MC, Richard Morrow from the Melbourne Mining Club.
Thank you, Andrew Thake, and it's a big Mines and Money welcome from Melbourne, Victoria, Australia, where we're back under lockdown, but fighting fit and ready to bring you another knock 'em down, drag 'em out, Mines and Money pitch battle. My name is Richard Morrow, and I'm chairman of the Melbourne Mining Club, ringmaster for today's event. We hope to set a cracking pace in our pitch battle between three interesting exploration companies. I have two Aussies and a Canadian under the spotlight today, hoping to grab a virtual prize of a notional $1 million investment from our team of expert judges. How's that for a carrot to dangle in front of three explorers? What some wouldn't do for an extra mil on the drilling budget? I'll ask you that. We have a bumper international expert panel of judges assembled here today to put these explorers through their paces, and it's my pleasure to introduce them. Chen Lin, president of Lin Asset Management, all the way from New Jersey. Thank you, Chen. My old mate, Gerard Farley, from executive chairman of Empire Securities in Sydney. Michel Labrousse, managing partner, Mazarin Capital, based in Hong Kong. Ahmad Saleem, research analyst with Ibaera Capital in Perth. And rounding us off is John Hodder, co-founder and managing director of Australia, Tembo Capital in Brisbane. Welcome to you all, and thanks for joining us today. There's a virtual mill hanging on today's verdict. So what are the rules? Well, it's roughhouse slugfest here today, no holds barred and tons of pressure. Our pitchers this morning will get just 3 minutes to give it their best shot to run through their asset and business models. I'll give them a warning when there's just a minute left for the pitch. We'll then throw to our expert panel and put the asset on our presenters to ask those punchy questions. At the end of the presentation, it's my turn to turn the blowtorch on those judges, find out what they thought of the presentations. We'll, go through the highs, the lows, the ups and downs, the noughts of crushes. Look, you get the idea. There's a virtual million on the line here, and we will tally up the judges' decision. I'll get the numbers right this time. We'll declare a winner. Right, we have three presenters today, so let's get right into it. First up, let's put the spotlight on Matthew Greentree. He's the managing director of Perth-based Ausgold. Ausgold is listed on the Australian Stock Exchange. And Matthew, your 3 minutes starts now.
Thank you, Richard. Ausgold's focus is the Cassier Gold project. So we recently upgraded that resource to 1.54 million ounces, which is a pretty substantial project. We're really well located in the southwest of Western Australia. We're a 3.5 hour drive from Perth. So in the days of COVID, we kept going, we've kept busy. And what we're doing at the moment is looking to expand that 1.54 million ounce resource base. We've been focused for the last little while on what we call the central zone. That's delivered the bulk of that 1.54 million ounces. That's got a 4 kilometre strike length. We've got 17 kilometres of strike length to play with in this main belt. And now we're looking at the central zone. So we're looking to see if we can further expand that resource base, and how much bigger can this be than 2 million ounces? We don't know yet, but we're going to find out with the drill bit. So our nominal $1 million could have a really big impact on what we're doing. We're at the moment pretty well funded anyway, but more money, more drilling. We've been able to deliver that recent resource upgrade at $15 per resource ounce. So you can do the maths. You can see how big this could be. Beyond that, we're in a really good position. The Southwest Yilgarn wasn't particularly fashionable until a little while ago when a company called Chalice found Julimar. So there's been a lot of attention in our neighbourhood, but we got in there early and we've been able to pick up a land package of over 4,000 square kilometres along some really key structures. And that's been noticed. To the north of us, Anglo-Americans just picked up 10,000 square kilometres. We think we've got better ground anyway, and we're keeping doing what we're doing. And we think this could be a fairly substantial resource project in the southwest of Western Australia. It's pretty good where we work. It's mostly farming land, but it's really well supported with the local community. We've got grid power to site. Again, local workforce. It's not a bad place coming a 3.5-hour drive from Perth to get to your main project. There's no planes involved. There's no risk of being caught out with the current lockdowns that we see elsewhere with other projects. So I think we're in a really good position. With that really a substantial resource base we already got. Is that time?
1 minute, 1 minute.
1 minute, I'll keep going then. So with that substantial resource base, we're already started looking at the economics on that as a development proposal. So we're really well placed with that substantial resource and the options to increase that with further discovery. So I think that's really the pitch. We've got a substantial project, which is going to get bigger and better as we keep drilling.
Wow, thank you very much there on that. What Matthew, right on the money there, and a good punchy pitch. That's what we like here at Mines and Money. Okay, let's get along across to our judges and ask what they need to know. And the first question will come from Michel Labrousse, Managing Partner of Mazarin Capital in Hong Kong. Mike, you're on mute there, Michel.
Sorry. Yes, hi, good afternoon. I'd like to know how long you're planning, to explore. What is the objective and what's the time frame to reach that objective? Because very often we see many exploration company that, keep on, exploring, and you never understand really, what's the goal. And, of course, the goal is more ounces, but, what's the time frame, which is, key, in these days. Today, there is a strong undertone, positive undertone for the exploration companies, but that may not last. So you don't want to explore, 5 years from now and, be caught into a bear market.
Yeah, sure. That's a very good question. And it's, I guess, always tempting to look for a bigger prize without a timeline attached to it. What our focus is at the moment, we know we've got a project with our 1.54 million ounce resource base. What we're looking at now is, I guess, scale. And I guess in terms of geology, we've got a replication or a mirror image in what we call the southern zone. So we want to just test that very quickly over this next drilling season. So our drilling season is in concert with the farming. So we tend to get more active when the farmers are less active. So the view will be, we'll have some answers over the next 6 months or so about our development proposition there. So we've already started the key study elements, the geotech, the metallurgy, open pit and underground studies. So we're really starting to look at that in context of where we'll end up in terms of a more formalized feasibility study and development.
That's great question, great answer. John Hodder from Tembo Capital in Brisbane. From that private equity perspective there, what more would you like to know?
Hey, Matt.
G'day, John.
Good pitch. Matt, what's the head grade and the ounces per vertical meter looking like at the moment?
So look, the head grade that the overall grade, the resource grade is 1.25 grams per tonne. The head grade that we've been looking at is about a 1.4 to 1.5. Ounce per vertical meter, you got me on that. I can't tell you off the top of my head.
No worries. So has the recent drilling in your way met expectations in and around, say, what you'd previously modelled, or do you think the grade has got better?
Look, there's been a lot of understanding, and I guess goes back to Michel's question as well, is I think the biggest risk, particularly in early stage development, is geology. I've been trying to de-risk the project by removing that geological risk as best as possible. We're in a new region of the Yilgarn that's higher metamorphic grade. So some of the earlier structures that control the gold mineralization, so it's a slightly geological answer there, are obscured. We've spent a lot of time and energy working that out. And we've got a very, very good working model now and understanding of the belt. We've learnt a lot from our focus on our central zone. And to answer your question more specifically, we've got a very good handle on what controls the high grade. Although it's a 1.25 gram per tonne ore body, there's some extremely high grade zones within that, which exceed, our highest grade is 315 grams per tonne. So it's not, when we're in these high grade zones, it's not inconceivable to get 10 metres at over 10 grams. And we're looking for those because they really add value to the project as a mining proposition.
Thank you very much. I'll let others ask questions. Thanks, Matt. Cheers.
Thanks, John.
Thank you, John. Thank you, Mark. Gerard Farley from Empire Securities in Sydney. Have you got a question, sir? Oh, you're on mute there, Gerard.
I was just looking at the your share register, and I see the top 20 own about 35% of the company.
Yeah.
Do you think you need to get institutional support? Possibly, do you think, how far do you think you're away from perhaps generating another 1.5 million ounces, if you like? So I think 3 to 5 million is probably the magic in Western Australia when there's so much opportunity around.
Yeah, look, I think this drill season that we're embarking on at the moment is incredibly important. Looking at, we've got our central zone, which I think is getting to a level of maturity where we have a very good understanding. And that delivers most of that, I'd say about 90% of that 1.54 million ounces. The southern zone, it's at the moment got 9% of that resource base. We think that could be a lot bigger. And if it does play into our thesis that it's a mirror image, it's a fold replication of that main central zone, I think that will really build into fairly quickly. And then it'll be just a matter of how many drill rigs we can get onto it. We're getting some early stage encouragement from this new drilling. I think we've looked over a footprint of over 8 kilometres of strike length in that southern zone already, and we're starting to see some real encouraging signs. And I think as we get better access in the next 2 months or so with the farmers pulling off their crops, we'll really get those answers fairly quickly.
I believe they're going to have the biggest season of all time as well.
Yeah, there's lots of smiles in Katanning. Lots of smiles.
2 crops, a crop of wheat and a crop of gold. That sounds pretty
Absolutely.
good to me. Great questions, Gerard, and great answers there, Matt. Ahmad Saleem from Ibaera Capital in Perth. Have you got a question? This is right in your backyard.
Yeah, that's right. Hey, Matt, good pitch,
Hey, Matt.
great pitch. So one question I had is so currently you obviously have your main deposit, and then you have quite a large tenement holding. So how do you handle like where you put your resources in, say, kind of testing the ground regionally, and as well as kind of building the current resource? Because I guess, like one of the things that you kind of mentioned, that you have quite a lot of geological complexity, which means that you can probably hide a lot of these deposits in small kind of targets around. So how do you kind of handle that interplay on how do you want to test, like say the rest of your ground for other targets that could be the same or better, as well as kind of drilling out the current resource?
Yeah, look, it's a good question, and it's always a challenge when you've got a big ground holding. It can be seen as a liability. I don't. I see it as a massive opportunity. We're just really starting to understand some of that belt. The Geological Survey's just released a big data package on the southwest Yilgarn, and the host structure to the Katanning Gold project is seen in terms of order of magnitude, second only to the Ida Fault, which is one of the main controlling belts in the Eastern Goldfields. So what we're working on is a very substantial geological province. It really hasn't seen the attention for a lot of reasons, which I don't think are very good, mostly just land access and perception. The Boddington gold mine, which is Australia's, I think, second biggest gold mine now behind Cassiar, was only discovered by chance, really, when they're looking at bauxite. So, and down the road, not too far away, is Greenbushes, one of the world's biggest lithium mines. And, a couple 100 kilometres to the north, now we have Julimar. This whole terrain is really starting to open up as a major mineral province. I guess access and perception have been the two things that have been holding it back. But what we've started to understand, and I've been working on this project for a bit of time now, is that although these things have small footprints, some of the things we've learned from our exploration in our resource areas we're applying elsewhere. These often don't have a big geochemical footprint, as you alluded to, but they do have a good response in geophysics. We've been using EM quite extensively. So that's electromagnetic techniques, both airborne, downhole and surface. And they do have a good response from that for various reasons. Gravity, we've been using to really pull out our main structures. So we're really looking at, I guess, a mineral process, a mineral systems approach to our exploration. So we're really honing into areas which we think have got some potential based on concepts, and then applying some direct detection techniques such as our geophysics. The other things we're looking at now beyond gold is the PGE potential, nickel PGEs. To the west of us, we have the Red Hill intrusions. They're effectively the same age as the Julimar intrusive complex, slightly different composition, more mafic rather than ultramafic, but we are looking at those fairly seriously. We got some very encouraging drill results at the end of last season, up to 12 grams silver, 1.5% copper. So it's starting to look like there's something more to this region than just simply the gold hosted in this major shear zone, that there's a larger province at play, and it's been noticed by others as well. So the ground position is very tight around us today.
I'll stop you there, and I'll get the last question from Chen Lin from Lin Asset Management in New Jersey. Chen, have you got a story, a question there, please?
Yes, hi, Matt.
Hi.
Good presentation. It's just a curiosity. I'm not very familiar with your deposit. Are you the 1.5 million ounce? Are they mostly open pit, or there's some open pit and some underground?
So it's mostly open pit. In our last resource upgrade, we reported a 50,000 ounce underground resource, and we're looking at that potential because there's a very strong plunge control on these high grade chutes that I referred to earlier. So that they are very high grade. They're fairly extensive along strike. So what we're doing now is looking at some potential deeper targets along strike. And as you build up, I guess, that strike extent of mineralization, it warrants the vertical development that you need to support an underground. But to answer your question, most of that 1.54 million ounces has been considered as an open pit operation. One of the things we haven't done a lot of is very deep drilling. Most of the drill testing has been in the first 150 to 200 meters.
Oh,
That's great. Well, I'll put a line through there. Thank you, panel, there, for some great questions and some great answers there. Nice work, that one. All right,
Thanks,
our
Richard.
next presenter is all the way from beautiful British Columbia and right in the middle of their field season. Roque is president and CEO of Cassia Gold, listed on the TSX. Up against two Aussies today. Good luck with that. 3 minutes to pitch. I'll warn you when there's a minute left. Your time starts now.
Thank you, Richard. Hi, everyone. Cassier Gold is a Canadian gold explorer, and I'll just bring your attention to the cautionary for our local statements. So we are very lucky to actually be able to control an entire gold district. So you can control the entire Cassier Gold district. It's roughly 60,000 hectares. We already have a significant resource, 1 million ounces at 1.43 grams per ton. This is a flat-lying ore body that is near the surface. Most of the resource is less than 100 meters deep, with almost no overburden to speak of, but more excitingly, is open laterally in all directions and only constrained by drilling. 5 kilometers south of it, we also have a high-grade vein system that is 15 to 25 gram per ton material, 2 to 3 meter thick veins that is open along strike. And that's actually the focus of our 15,000 meter drill campaign this year, although we're also looking to increase our foundational resource at Taurus. We're located in a safe mine jurisdiction in North British Columbia, and we already have existing infrastructure. We have a permitted mill on site, 300 tons per day. We have mine permits. We have Highway 37 going across our property. You can actually drive on a paved road from Vancouver all the way to the top of the resource. You're always using a paved road. And we also have multiple property access roads that make exploration that much easier. We have a world-class leadership team, and I'll show you some of the names in a second. We're quite committed to sustainability. We always have been, but these days this is top of mind for investors, especially resource funds. And and for us, this is also equivalent to social license to operate. And more importantly, we are very, very attractively valued. You can see our market cap here is 26 million Canadian dollars. A very healthy cash position, $5.6 million. We're halfway through a 15,000 meter drill program, as I mentioned, with a very attractive EV per ounce from a resource that's from 2019. On the right-hand side, you can see some of our institutional shareholders. We have a very healthy institutional shareholder base, as well as a very healthy insider board management advisor ownership that keeps on increasing as we speak. 1 minute left, Marco. Just to focus a little bit on our property, it's 100% owned, 25 kilometers by 25 kilometers. The focus of our drill campaign is this 15-kilometer belt, step out on Taurus to continue to grow that million-ounce resource, as well as to increase the high-grade resource that we have at South Cassiar, which is 5 to 10 kilometers south. Quickly on some of the team members, we have Steve Ledwin as our chairman, owns over 5% of the company's shares. Previous president and CEO of Ausgold, Steve Robertson, quite critical in the development of Red Chris, as well as Chris Stewart, previously with McEwen, as well as the great Doug Perrin, David Rees, James Maxwell, just to name a few. Just to summarize, we have a significant resource, a million ounce, 1.43 grams per ton near surface, open laterally in all directions, an ongoing 15,000 meter drill campaign located in the safe jurisdiction with all the infrastructure, a world-class leadership team. We're committed to sustainability and very attractively valued with a very attractive point at just under 20 Canadian dollars per ounce, EV per ounce, as well as being a potential M&A target for majors as we explore and improve our exploration potential. Oh, I've got to stop you there, Marco. Well done. Nice 3 minutes. Well done. Great work. Look, do you have wolves in the wilds of BC? Because I'm going to throw you to this pack right now. First up, we'll have Chen Lim, President of Lin Asset Management. This is closer to home from West Australia than you, Chen, but have you got a question for Marco there?
Yes, hi, Marco. Good presentation. And I know Crescat people very well. And I think I saw your presentation before by Quentin, which I know him very well. The question is, you're currently in the middle of exploration, right? When do you see the results will be coming out, and what kind of expectation are you looking for?
Yeah, so we're halfway through our drilling program. We have 15,000 meters, and we've drilled half of that. And now labs in Canada and elsewhere have been completely full, and we've been dripped on results. We've actually been receiving some drill results, but they have been for not entire drill holes. So we are in the process of collecting the first entire drill holes as we speak. So it's quite imminent, and we expect this week or the next to be able to release our first batch of drill holes. And your second question was?
Oh, just what are you hoping? What's the goal?
Oh, how it's well. Yeah, we're very excited. Earlier this year, I personally accumulated 500,000 shares in the first half of this year ahead of this drilling season. So on the open market, so that tells you a little bit how excited I am, and that's also the case for many of the insiders. Insider ownership right now is roughly 31% and has been growing, and I guess that says something about our excitement about the exploration program, about the project, and as well as the rest of the insiders, about the company and its prospects. Gerard Farley from Empire Securities. BC is a long way from Sydney, but do you have a question there for Marco?
I'm just wondering what I know you can't make a prediction, but if you're very cheap on a EV per ounce, I think, by comparison to with such a good location. I'm wondering if they're expecting sort of 500,000 or 1.5 million ounces within that 15 million drilling? Have you got any sort of visible signs, if you like, XRF type? Is there any confidence there that you can see a doubling? Because the price, your market capitalization looks fairly undervalued at the moment, as far as I can see.
Yeah, I agree. I think it's undervalued, and that's why we've been accumulating quite aggressively on the open market. I cannot comment about results that haven't been released. I can comment about the how excited I was in the first 6 months, and I'm very much looking forward to releasing the results. Also, in terms of what is kind of a potential increase in the resource. What I can tell you is, the current resource that we have, I can maybe show you on this slide, occupies just 1% of our land package, and is open laterally in all directions. So we're looking to do step outs at Taurus to really grow basically the envelope of non-mineralization. In addition to that, so we're allocated actually 4,000 meters into growing in stepping out at Taurus, in the south, in the north, and I can show you maybe a map view of the resource here. Stepping to the south, we're stepping to the north, and we're also looking for extensions down dip. I think we'll have a substantial increase in the envelope of non-mineralization. That's my belief. As you can see, mineralization is mostly constrained only by drilling. So I have no reasons to believe that mineralization does not continue. That does not mean that it does. The drill bit will prove that or not, but I'm certainly very confident and hopeful on that. In addition to that, we also have, most of the drilling, majority of the drilling meters going to the south side of or the South Cassiar part of our property, which is a high-grade vein system, 2 to 3 meter thick veins, 15 to 25 gram per ton material, which is kind of represented by the historical production that you see here on the table on the bottom. And we also have a small historical resource there. It's 70,000 ounces at 18 to 24 grams per ton, which is linked to the surface through 25 kilometers of underground workings, and these resources at the end of it. So we're looking for extensions from these vein systems that are open, most of them along strike, as well as to look for parallel veins and stacked veins. So there's a lot of exploration upside here on a high grade. And again, here we can build ounces in the envelope of non-mineralization much faster, just simply because of grade, which as you can see on the resource, is 18 to 24 grams per ton.
Okay, Michel Labrousse from Mazarin Capital there in Hong Kong. Have your question, sir?
Yes, thank you, Marco. Could you, you have, various bullets into your gun, either in the main system, then in the vein south. But I understand you also have a dump site, an old dump site with 1 gram per ton that could be exploited to generate cash. So could you elaborate a bit on that and walk us to riches? How do you think the real value of the company is going to be translated into the stock price? Because that's really this path to development which I'd like to hear.
Yeah, absolutely. So we have 600,000 tons of tailings in 4 tailings facilities at an estimated rate of 1 to 1.25 gram per ton. Basically, these are the tailings coming from this historical production that I showed you here in this table just now. So the grades here were north of 15 grams per ton, and that's why the tailings are north of a gram. So that's definitely a potential for monetization. We could potentially monetize that if we so wish to pursue that route. And the same for the strategic optionality of potentially putting the high grade or even the bulk tonnage into production using the permitted mill that we have. Now, I think for the most part, I think we have a lot of avenues of growth. We have basically mineralization open in multiple directions in multiple parts of our property, and we have outcropping features across our massive 59,000 hectare land package. So really our goal is to prove as much as of the exploration potential as possible while we can. And eventually, I think, as we start, we have a near-term target of roughly 3 million ounces, and as we start, getting close to that point, I think, a company like ours in a safe jurisdiction with all this infrastructure, will become higher and higher in kind of the wish list for some of the majors, and I think that will be the most likely scenario. And that's, those are conversations that we have already initiated. Now, in the short term, I see two opportunities for the company to get re-rated. So I think we are undervalued just on what we have, and this is a 2019 resource. We already had a very successful 2020 drill campaign, which is actually summarized on this slide. In addition to that, we will have the catalyst coming from this drill campaign. We will be, for the first time, we have allocated 4,000 meters into Taurus, and we're currently receiving the results of this exploration program for this year. The results that you see here are from last year, from 2020. In addition to that, we will also have, and we've drilled for the first time, the high grade at South Cassiar, where we have those spectacular 15 to 25 gram per ton material grades. So, and as you can imagine, you can have even higher grade intercepts for smaller intercepts as well. So that will, I think, serve two purposes. One, will continue to further the project and grow the resource space or the envelope of known mineralization, both on the bulk tonnage as well as on the high grade. But at the same time, it will help us on getting more attention, because a lot of these days, especially on the retail side, what you see is a big attention into high grade, and I think we'll have some exciting results coming from the high grade that will also be a further catalyst to the share price. So next few months,
Marco, I'm going to stop you there, mate. I'm going to stop you there, and I'm going to got to get a question here from John Hodder from Tembo Capital in Brisbane. John. Oh, I got you on mute there still, John. Just if we could unmute John, or John can unmute. There you go, John.
Yeah, thanks for the presentation so far, Marco. Great. The mill, do you have a mill on site?
I do have
on the tenements.
Yes, we do.
Yeah, and what sort of throughput do you think you could get? How quickly could you be into production? Yeah, and at what sort of scale? How many ounces?
Yeah. So it really depends. So just to give you a sense, I think I have a picture here. Yeah, the picture of the mill here on the right, as it stands. It has produced in the past, so actually that solves a lot of questions about metallurgy that people might have. So it's a 300 ton per day mill that is fully permitted, as well as the tailing facilities, as well as we have mine permits. So we could potentially be relatively quickly, if we so wish to be in production. Now, 300 tons per day, you can't really have a significant production. Especially if we're processing 1.5 gram per ton material. If we're looking into the 18 to 20 gram per ton material, that's already something. But I think in all likelihood, that's a strategic option that we have, and in all likelihood, with the ambitions that we have and with the potential this property has, I think the most likely scenario for this mill is that its potential to be re-permitted for something substantially bigger that fits the ambitions and the potential of this project.
Okay, I'll stop you there, guys. Sorry to jump in there. Got to keep this thing moving. Good presentation, very good questioning, and I love those slides with the visible gold in there, Marco. Nice work. Oh, gee, this fight for the virtual mill is certainly hotting up here. Our final presenter today is Andrew Muir of Caprice Resources, also listed on the Aussie market. Andrew, your 3 minutes starts now.
Thanks very much, all. Good evening, afternoon, and morning, depending on where everybody is. Quick snapshot on Caprice. We're a junior gold explorer. Our ticker is CRS. We've got a 13 mil market cap, so quite a big difference to the previous two. We're focusing on the Murchison area of Western Australia. We've got 150 square kilometres. It's a very fertile area, yet large areas of our tenements have been underexplored. We do have historic high-grade gold on the tenements. We've got a new management and technical team. I only joined about 4 months ago, and my exploration manager joined about 5 months ago. We're actively exploring. We've got 2 RC drill rigs on site, and it's a fantastic location because we're surrounded by Musgrave, Westgold, Ramelius, and Odyssey, to name a few, and also less than 50 kilometres to processing plants. So, as I said, we're at a different end of the scale compared to the previous two. We don't have any resources as yet. So sort of when you're looking at investing, for want of a better word, in junior explorers, you're really weighing the upside risk versus the potential return, what the downside versus upside is. So in terms of Caprice, what makes investing in Caprice a good opportunity? So we think we've got a pretty good risk return balance. In terms of the downside mitigation, obviously key risks is your jurisdiction. We're in a tier 1 jurisdiction, Murchison region of Western Australia, fantastic geology, obviously very good tenure law, etc. We're also close to infrastructure. We've got sealed roads that connect the 2 processing plants. That sealed road, which is the Great Northern Highway, goes through our prospect, and they're both within 40 k's. And we've got historic high-grade gold. The geology is fantastic. We know there's gold there. It's in high grades within banded iron formation. And corporately, we've got a pretty tight capital structure. We've only got 68.6 million shares on issue, cashed up with 3.3 million in the bank, and we've got proven management. So what's the upside? Well, we're actively exploring, adding value by the drill bit. So RC drilling now, air core drilling soon. We're testing new areas. 25% of our area is on an island. It's at 100% of the exploration. 75% of the tenement's not been explored as it's under a salt lake. So we're going to get out there and drill a salt lake, which has never been tested before. So we're going to generate pretty strong news flow over the next couple of months and also crank up the marketing. And of course, with a tight capital structure, anything that we find will likely have pretty significant share price appreciation. So it's a fantastic location. We think there's a good chance for M&A in the region, given the locality of the mills and what's going on in the region. Good management team, tight capital structure, and the main thing, we're out there having a crack and looking for gold. If there's gold there, we think we'll find it.
Great work, Andrew. Right on the money, 3 minutes almost to the second. Excellent stuff. Let's go to our panel straight away here. We've got Ahmad Saleem from Ibaera Capital in Perth. This is right in your backyard again. Have you got a question there for Andrew?
Hi, Andrew. Good presentation. I guess one obvious question I have is, you look at where your project area is and you have quite a number of gold explorers that have been working in and around that area for a while. So I guess my question is really, what are you guys doing that's different to what people have done in the past here? Like, how come Westgold or also Musgraves and a few other people that have recently got into this area, how come they didn't see the potential in this ground, or how are you guys seeing potential different?
Yeah, so look, it's a very pertinent question and actually very relevant for us in that the ground has been held by a prospector for the last 20, 25 years, and he's probably averaged about 4 drill holes a year over that time. Now, he was looking at a small scale sort of tribute mining concept, which is not what we plan to do. It really needs some more expansionary exploration, step out, and also looking for new deposits. So 25% of our ground is actually an island, and that's where the entirety of the exploration has been focused on, these banded irons that the old timers mined. The remaining 75% is a salt lake. So given that Mick Caruso, who had the ground, was focusing on the banded irons, he was basically just chasing the mineralisation down and doing sort of 5 or 10 metre step outs, which I guess is good from a prospecting perspective, but from an ASX perspective, we needed to step out and look for new things. So the geology under the lake is really, really exciting. The structures are there that we see on the island. We just need to get out there and put holes into that. So you can understand why there's been no historic drilling on those areas because of the salt lake. But as we know, technology's changed in the last 20 or 30 years. So salt lake drilling is not that big a deal. So we've got Raglan drilling is going to go out there and do some air core on the lake towards the end of, what is it? Well, this month now. Yep.
No, that's good. Chen
cool.
Lin,
Thanks, Andrew.
President of Lin Asset Management in New Jersey. Have you got a question here for Andrew?
Yes, hi Andrew, good presentation. Just curiosity, do you follow any geophysics, geochemistry to determine where you're going to drill? And do you have a budget for your upcoming drilling campaign? Thank you.
Yeah, so what we've found works really, really well is ground gravity. So we've done a ground gravity survey over approximately half of our tenure, and we're going to expand that. That we only did half because there was water on the lake, so that just stopped them from accessing it. But it's now dry. I was up there last week, and it's easy to access and walk across. And that shows up the structures really, really well, the ground gravity. And it's highlighted that there's a number of northwest, southeast oriented structures, which is what Musgrave and Evolution are seeing on the ground adjacent to us. So that's a fantastic tool for enabling us to, I guess, look through the Salt Lake sediments. And in terms of budget, the drilling that we're doing now is going to cost about $1.5 million. I'd imagine we need to do our budget for the next sort of calendar year or some financial year. Obviously, that's going to be somewhat dependent on the results from the current drilling program and the pending air core, but I would envisage in the range of sort of $3 to $5 million, depending on how aggressive we want to get.
Okay, thank you very much, John Hodder there from Tembo Capital in Brisbane. Bit early stage for you, but have you got a question here for Andrew?
Yeah, sure. Good presentation, Andrew. Nice pitch. When you look around, Andrew, what do you think the target sizes could be based on what you're seeing in the region and the structures that they're holding?
Yeah, look, it's a length of string argument sort of thing. The banded irons that we've got at the moment, as you know, banded iron formations typically in our neck of the wood generally tend to be smaller but high grade. Yep. They could be anywhere from sort of 50 to maybe 100, 150,000 ounces. The thing that excites us is underneath the lake, where we've got the same structures that charge through, but it looks like the geology changes. So it's more mafics and intermediates and felsics, but it's still structurally complex. So we think there's a chance for larger styles of deposits that sit underneath the lake. How big that can be, look, who knows? You know, there's multi-million ounce deposits in the region. They're all different. Some are granite hosted, some are BIF hosted, some are shear hosted. We don't have our blinkers on. We don't propose to know that there's any particular style of mineralization there. We're basically just going to go and test everything. You know, as they say, gold is where you find it. So look, we're targeting plus million ounces. I guess what will be interesting to see, given we've got 2 processing plants in the region, and we've got Musgrave next to us who are doing scoping study. Anything that's got some reasonable grade in it will be of value to any of those parties. So my observation would probably be if we find something of value, we'll probably disappear because it'll add a lot of value to those existing projects. But look, time will tell. The only thing is we need to have a seat at that table, and to do that, we need to get out and drill.
Michel Labrousse from Mazarin Capital in Hong Kong. Do you have a question here, sir?
Yes, you know, I hear and understand that, you know, you are at the beginning of this drilling journey and, you know, value realization. But if you look at your peers, what's happening around, and your own feeling of the ground, I mean, how do you see your value creation in time? I mean, let's say you're talking about a let's say smaller system, if I understand what you just said. So what would be your target in terms of ounce evidence versus market cap and the time frame attached to it? Because I'm very sensitive to time. You know, we want the money to grow quickly, not waiting 10 years or.
100%. Yeah, no, absolutely. And that's why I think we're a fantastic risk return. It's and highlighted by our tight capital structure, so that with a EV of about 10 million, you know, if we find something and we can go to 40, 50, 60, 100 million, you know, you get up to 10-time return in a pretty short space of time. So in terms of, ultimately the question is, what's the size of the prize, I guess. Look, we could have anywhere from sort of 250,000 ounces through to maybe 3 million ounces, and appreciate that's a bit of a vague answer, but the wild card is really what lies underneath the lake, because that geology has never been tested before. It doesn't outcrop. We know it's structurally complex, and no one's tested it along strike. So we think it's highly prospective, and I'd like to think there's multi-million ounce potential. We're in the right region for that. We just need to get out there and test it. But on the ground that we've tested so far, I would have thought we'd have at least 500,000 ounces. But as I said, that only covers 25% of our ground. But
okay, that's always a hard one question to answer, and a great question there. You want your money to grow quickly. I like that, Michel. Our final question for our speaker here now is from Gerard Farley in Empire Securities in Sydney. Gerard, what's your burning question?
I've been following Musgrave very closely for a long time, so I think what you're doing is actually perfect opportunism, in the sense that collectively they're really starting to put together some very fascinating results, and quite good grades, high grades from surface pretty much. But then in the lake, I don't think they've been doing that much in the lakes per se, but it seems to me to be a great opportunity. What I'm trying to work out is that you've got, did you say 6 million cash?
No, 3.3.
3.3 million cash, sorry.
Yep.
Yeah. So you're spending 1.5 right now, and you'll know the results. How are you finding the queue for the labs assays and tests and things like that?
Oh, you look like everyone. Frustrating. I mean, look, it's good from an industry perspective that, you know, everyone's out there drilling and producing results and stuff. But of course, individually, it's frustrating because we're waiting for turnaround. Anywhere from sort of 6 to 8 weeks is the standard sort of time frame. We're trying to be a bit clever about it. Instead of putting really big jobs through, we're trying to put in smaller jobs and isolate the areas that we want tested first, just to try and speed up that turnaround. Just being smart about it, I suppose. But look, it is what it is. Everyone's in the same boat. It's frustrating. You're just going to make sure that you sort of fill that news flow gap whilst you're waiting.
Well, that's great work there, Andrew Muir. That's very, very good, and good questions there from the panel. Wow, 3 great pitches. A virtual mill up for grabs. $1 million would pay certainly for a very, very decent drill program, even if you had to wait 6 to 8 weeks for the results to come back from the labs. Our panel of judges is mulling it over. I can hear those brain cells doing the maths. An MPV here, a gold price there. So let's hear from them. Can I start with you, Chen Lin from Lin Asset Management, New Jersey? Who got your money, how much, and why?
Yeah, hi. Yeah, great presentations. I was quite impressed with Ausgold and their project. And but I probably will put my money with Cassia and Marco. Yeah, they are in the middle of drilling. They had success last year, and then the results is coming in next week or two, if I hear him correctly. So it's really quick, you know. And then they also already have 1 million ounce of resource there, plus a significant insider buying. I think that looks like a good investment for. As an investor, put my money in. I will put my $1 million with Marcos at the Cassier Gold.
Chen, is gold really front and center for you, or are you looking at other metals at the moment?
Right now, mostly gold and silver, and some PGM, platinum, palladium, and you know, that's mostly I focus on in the mining sector. Yes.
Very, very good. Look, thank you for that. We got one for Marco. That's excellent work. Next, Judge, if I can go to Ahmad Saleem from Ibaera Capital in Perth. Ahmad, who got your money and why?
Yeah, great pitches, guys. I guess, Andrew, unfortunately, I think you guys are probably too early a stage, so you probably have to have a bit more results for us. And Marco, as much as I like your project, it is BC, which is having worked in that area, it's a pretty long development cycle. So yeah, if you guys get bought out, great. But if you have to try to take this thing to development, that's probably too long a period for my money. So I'll probably end up going with Matt and Ausgold. I think I probably see these guys are probably the most advanced. And yeah, they're going to have their own challenges where they are, but I think they're probably closest on that development curve for us.
That's so one to Cassier, one to Ausgold there. The exploration, Ahmad, and the slow return from the laboratory assay labs, is that worrying you as an investor at all?
Yeah, it does. I mean, I think the problem is, like kind of Andrew mentioned, particularly in, I think, our part of the world, there's a lot of people working, and it seems like all companies are kind of having that lag in returning results. So like obviously everyone goes out in the field season, and then so there seems to be a bit of a kind of a lag in how the results come in, because everyone's drilling and then everyone's waiting kind of the same period for the results to come through. So from a point of view of kind of monitoring these companies, it's a little bit challenging, because it seems to be kind of a feast of results or a famine of results.
And that idea for Caprice's model there, looking under the lake, I mean, I'm hearing that more and more from West Australian companies. Is that something that you're hearing? Is it something you like to hear? Do you think the opportunities are there, covered by
I mean, like
what was used to be a barrier to
Caprice said, Yeah, exactly. I mean, like you said, I think, for a long, long time, companies probably couldn't explore under lake, so it was very cost prohibitive to do so. So your dollar just didn't go very far. Now, I think, with the technology the way it is, and the type of rigs, there's obviously specific rigs that can drill through salt lakes. So I think, these are all obviously untested areas for a long, long time. And so, it makes total sense for people to go into these areas now.
Oh, that's good. Okay, we've got one for Caprice, Cassier, and we've got one here for my next speaker. But we'll go to you now, Gerard Farley, if we could. Who got your money and why?
Well, I thought Cassier was a very, very cheap at an enterprise value basis, and similarly, Caprice, but Ausgold, whilst it's fairly well valued, I'd say, it's got the potential that some of the big success stories in its neighbourhood, with not only gold but PGEs. I think it would be easy to buy a good stake into that stock, and if things align in both the precious and the base metals or PGEs, that could have a very large run, and it'd be easy to sell and easy to buy. So I think Ausgold for me, even though the others look remarkably good value.
Oh, it's hotting up here. Thank you, Gerard. That's fantastic. So 2 to Ausgold and 1 to Cassier. Oh, we're getting to the business end of it now. John Hodder from Tembo Capital in Brisbane. Who got your money and why?
3 great presentations. Thank you all. I think strategically, when we look at things, it's all about the exit. I think, it's a little bit early for us. I enjoyed the presentation, but I think on balance, we'd be going with Matt and Ausgold. We think that the ground is strategically significant. They've got a fantastic package of land. And as Gerard just said, if they have any success in the PGMs, which I know they're not currently, but I think more success in the gold, and you start to get a gold center forming there, it's always good M&A, and you can see that a major could want to hold that whole land package. And so our money would be going there. But well done to the other lads,
Oh, that's right. It's not generally an Aussie thing to wait for the takeout or pitch for the takeout from a major, more or a Canadian style of business. How would you say to that?
Well, we tend to be quite large investors, so if we put $1 million in, we're not looking. We're looking for a project to be developed out the other end. So I can understand that people who run different styles of funds are more interested in relative value. Well, this looks cheap and I'll be in and out, and that's really just not our style. But when I look at the whole packages, they're all interesting, really interesting positions. And I think they'll all, if Andrew has any luck under that lake, he's not going to be around for long. And similar in BC, I just think they're in the right neighborhood, but strategically you could see a major wanting what Ausgold has, and I'm not saying Evolution isn't a major, by the way. They may well want whatever Andrew has. So,
thank you, John. So we've got 3 for Ausgold and 1 for Cassiar. Michel, Labrousse, what did you think? Who got your money and why?
Well, I mean, thank you for the presentation. All very interesting. We are very focused on, potential return and the concept of monetization of investment. So, looking at the various presentation, we like the optionalities which are with Cassiar, with the capacity to potentially start a small production even on the tailings, which may pay for the development of the larger asset. So we like that possibility of development, because the capital markets may not stay as they are, and unfortunately we can't rely on the capital raising and dilution to go towards capital realization. So we definitely would vote for Cassiar.
Oh, there we go. There we go. 3 to Ausgold, 2 to Cassiar. Well, got a bit of pressure going on here. That's building quite a bit. Well, we've got one more judge to hear from at this stage. Who are we going to get the money, and what are we going to see on that basis? And I've lost my place of where I am at the moment. Who hasn't voted yet there? And have I got my numbers right? I think I have. Have we heard from everyone? Who did I hear from? Totally, I've lost my place. I do apologize. That's right, isn't it? Got 2 to 3, and we've heard from Chen, we've heard from John, we've heard from Ahmad, we've heard from Gerard, and we've heard from Michel. Gee, I tell you what, that looks like about it. I might get Andrew to check my maths on that one. This is going right down to the wire. Andrew, can you jump in there and rescue me, please?
Yeah, I'm just checking your maths. I think you have heard from all 5 judges, so I make it 3-2 as well.
Oh yes, that's right. Yeah, what I say, stockbroker, not very good with the numbers. Well, that's it then. Yes, so the money goes to Matthew Greentree of Ausgold over there in Perth. But a very tight race there, Marco, from yourself, and quite a good fight here today at the Mines and Money. Well, it's time to thank our presenters then. The successful Matthew Greentree from Ausgold Limited, Marco Roque from Cassia Resources, Andrew Muir from Caprice Resources. Bad luck there, mate. You didn't get a vote there, but I did like your project. And a big Mines and Money thank you to our great international judging panel here. We had Chen Lin all the way from Lin Asset Management in New Jersey. We've got veteran deal maker Gerard Farley, Executive Chairman of Empire Securities in Sydney. Thanks, Gerard. Michel Labrousse, Managing Partner from Mazarin Capital, based in Hong Kong. Thank you very much today. Ahmad Saleem from Ibaera Capital in Perth. And of course, John Hodder from Tembo Capital in Brisbane. The Melbourne Mining Club and Mines and Money, thank you all for joining us today. So thank you for participating. Congratulations to our winner, Ausgold, and we will be back again with a new pitch battle just in a few months' time. Thanks very much.
Thank you.
Thanks a lot, guys.
Everyone.
Cheers, guys.